all non-Swiss German-speaking people in Switzerland. Welcome to the investment focus of the Hypothekarbank in Lenzburg. The topic today is secular stagnation. Secular stagnation indeed is an issue that affects all of us. On the one hand, we have the industry that is affected by disruption. On the other hand, we have private consumers that come to us on a regular basis asking the question, how can we develop further? How can we grow further? To our understanding, this is also an issue that needs to be addressed globally on the one hand, and certainly does affect financial markets as well. When it comes to financial markets, we clearly focus on economic growth. Economic growth, to our understanding, is the basis for an assessment of what is to happen going forward. When we look into economic growth, we look at nominal GDP as composed or as compiled by the World Bank, and we find that 2015 has been the worst year in the 55-year history of this time series. We can easily say that this decline is mainly due to the natural resource industries or economies such as Brazil on the one hand, Russia on the other hand. Those are the economies that weighed heavily on economic growth, global economic growth. Specifically, we have had the worst year, or 2015 has been the worst year since 2008, even worse than 2008 financial market crisis. To our understanding, this is a clear indication that secular stagnation is indeed in place. We can clarify or quantify this further when looking into US economic growth. When looking into US economic growth, we find on the one hand that nominal GDP is on the decline. It declines faster than real GDP, and the narrowing gap between those two time series is a clear indication that on top of a real output, it's inflation that declines. When you have declining inflation, this will impact nominal interest rates. So the immediate impact of declining growth, secular stagnation, is low interest rates. On the other hand, we would argue, however, that there is still growth potential when it comes to companies or the equity markets in general. And the reason for that being that you may have stabilizing top-line growth, but on the other hand, you have widening profit margins. Now, when looking into profit margins, you have to be very careful not to mix up things. On the one hand, we have sectors which have growing profit margins in Switzerland in particular that are related to the real estate sector. Real estate sector, on the one hand, is positively affected by lower funding costs, in essence, lower interest rates. And on the other hand, we have companies or sectors where we have indeed margin expansion, profit margin expansions. When looking for good investments, we specifically concentrate on those companies producing margin expansions. Our main or our best idea in this respect is a local company from Switzerland, from the canton of Aargau. It's Siegfried. The Siegfried company has been able to expand its margin continuously over the last year. It is expanding its top line growth on top. So in sum, we think that this is a really good investment. Although we are fully aware that prices have increased substantially, we would nevertheless argue that we are very comfortable with investing our money in this company. This is it for us today. We have in 2 weeks an update on the business cycle and financial markets. It will be the beginning of November, and we hope that you're going to tune in again on that month.